We just left one of the most tumultuous interest rate markets in the history of real estate, especially here in the Denver metro area. And just like any good Denver or suburbs native, we're going to ask ourselves, where do we go from here? And the honest truth is we can't go under it. We can't go through it. We got to go over it, just like a great 14er just outside the city here. And we're going to grab our hiking boots and we're going to tackle this January 2023 real estate market update for Denver and the suburbs. So stay tuned. What's up, guys? Jeremy Kane with eXp Realty here and proud Denver native. Super excited to talk to you about the January 2023 market update. We've ended 2022. Some say it was a terrible year. I thought it was a great year. It must be because of those 300 days of sunshine here in Denver and the suburbs. But I'm super excited to bring this market update to you because I feel like a lot of the stuff that's out there is not quite accurate. And I'm going to give you a little bit of perspective on why I think it might be a great year to buy and sell real estate in Denver and the suburbs. If you're interested in my free home buyer course, I would be happy to send that to you. Just comment below Denver in big capital letters and I will get that to you. But without further ado, let's jump in. All right, so 2022 ended with a bang, one last kick in the ass for those interest rates. The $1.7 trillion spending bill that our wonderful government passed really had an effect on the market, and that in turn with seasonal slowdown in those last 2 weeks had buyers sitting at home and spending time with their families, which maybe they should be at that time of year. But it absolutely was something that we noticed. Sellers, even in December, were willing to give back just a little bit more with that, immediate need to get those properties moved. So that was one last kick in the butt by 2022. So that was hopefully one last, puppet string move where we saw buyers flood into the market anytime anything changed in the interest rates, similar to like a day trade. Everyone's rushing to that hot stock or whatever. Hopefully this kind of subsides as we move forward. And I'm thinking that it might, just judging by how my phone's been ringing the last couple days. So after, we passed 2022 and we kind of shut the door, I'm going to be that guy that's going to give you some perspective on looking back. And the headlines will be absolutely insane. So understand that there's headlines and there's reality. And even within those headlines, make sure you're reading those articles, because what they're going to do is highlight that, phenomenal, sensational statistic that makes people think, oh my goodness, for instance, the worst housing market since World War II headline that we saw going on. And then when you read the article, it gives you a little perspective. So I'm here to give you some perspective. We're going to talk a lot about a 3-year average. 20 and 21 were absolutely crazy years due to the pandemic. So we're going to pull in 2019 as kind of our last normal real estate year. And when we do that and even go further back in some of these statistics to 2012, we will see where our market is. So whenever you're seeing these statistics, I'm going to tell you right now that the year over year statistics are going to provide for great fear-mongering, sensationalized headlines coming out over the next couple months, because we were absolutely on fire in the first months of 2022. So with us going back to a seasonal norm, which I'll show you by the percentages here, we're going to see huge year over year losses and big numbers and scary numbers. But keep in mind that 2022, the first three and a half months of 2022 were insane and not really, obtainable as a new standard. So understand that's where they're going to go, but the honest reality is that was absolutely far from anything but normal in the first 3 months of 2022. So first, let's talk appreciation. We had hit a high in May of 2022 with 44.6% appreciation over the previous 3 years. So that was kind of our 3-year high, the peak. Since then, we've given out back about 4.9% in home values. So you hit 44.6% appreciation, which is absolutely insane over that 2.5-3 year period. And we gave back 4.9% as we headed into the close of 2022, which has been captured by some of those Q4 headlines. So when you think about it, gaining 44%, 45% and giving back 5%, that's a pretty good deal. You're still pretty far ahead on your investment to own a home, and you live there. The next one I want to kind of focus on is kind of an interesting one. 2020 and 2021 finished with an average of 64,000 homes sold each of those years. And that's a number that we can kind of look at. When we add 2022 to that mix, it brings the average down to 60,000 homes sold. And so people are kind of worried about that. You've seen the statistics again, year over year, 30% down, 35% down in home sales. Well, when we look back at 2019, all the way back to 2012, the average home sales for the Denver metro area was 55,000. So we're still not even to that, 6-year average, 7-year average there. But since it's year over year, they're kind of comparing those statistics and taking back. Now, some would argue that, a lot of people moved here and we should see more home sales and all of that, but we are still 5,000 above. So to me, that kind of balances things out and makes me think that we're probably not in such a dire straits, especially as real estate agents selling homes, as maybe the headlines say. The next headline I want to talk about is, Denver's real estate market is decreasing as fast as, anyone. They're on all the top 10 lists for all the markets that have lost more value and so on. And the truth is, if you go up, you're going to come down. So it's quite ironic that no one's mentioning that those same 10 markets that are listed in the 10 hardest hit, based on the second half of 2022, were also the ones that were, in the spotlight as the top fastest growing and appreciating markets on the front end. So that's something that we kind of don't take into perspective. Obviously, if we go up, more than anyone, we're going to come back down as it, kind of averages out. So nothing crazy. We gave back 4.9% in appreciation in our market. That's a specific to Denver market, and we're going to be okay here in the Denver market. But that headline makes people kind of freak out. I don't know what to say about that. So now that we've kind of got that headlines and those fears kind of at bay, let's talk about what I see for 2023, what some of the people that I follow are saying. The truth is that we're going to be headlined by an inventory shortage, and I'm going to tell you exactly why. Because builder starts are down, big numbers. They're not building as many homes, either because of supply, because of labor, or because of demand. But the truth is that it takes a while to get that started again. So I think that inventory will be a constant issue. We'll talk about demand in a second, but rates I think will stabilize once the Fed gets a hold of inflation and they do what they want to do with their manipulation of the economy, and hopefully rates stabilize. I've heard a lot of people that I respect talk about rates, in the 5s, probably not much lower. And that's, you got to talk to your lender. That's all, specific to your situation. But, if we see that, that rate of 5, people will kind of start to flood into the market, because we saw just little dips from 6 3/4 to 6.5 or 6 5/8 or whatever cause extreme rush to the market. And I'm hoping that we're not going to be seeing that with the day-to-day and day trading type things, but I'll talk about that in a second as well. So now when we're talking about 2023, we have to talk about demand, and the largest age population is 32. The average first-time home buyer is 34. So as those buyers are raring and ready to go, you will see also a group of pent-up demand, right? We've had quite the last 2-3 years, as I've been saying. So you've had a bunch of people that have either been priced out of the market because they couldn't save fast enough, and they couldn't compete at those higher levels with those FHA loans or whatever. And so they kind of were on the sidelines. So there's a whole population of people there waiting to break loose. After, deals started coming to the market and sellers started loosening up their, expectations at the end of 2022, then it was more fear. And so they were feared out of the market. And so there's, a pretty large group over the last 2 or 3 years that have been really on the sidelines waiting to come to market, with the population, biggest population of 32-year-olds coming. Eventually people are going to be like, okay, I'm sick of it. I'm just going for it, right? Because over that last 3 years, they've thrown away hundreds of thousands of dollars in rent. And so that's going to be something that's going to come. They're going to come. People are just not going to not own homes and buy homes, because obviously, as I talk about in this video here, the net worth of a homeowner is 40 times that of a renter. Doesn't matter what the situation is and what the affordability is and all of that. If you get into a home, the whole market, the rental market, all of it kind of comes to an average. And that's what I see happening is these people are going to be like, okay, enough's enough. I'm getting in. And if there's opportunities, maybe to get a deal earlier in 2023 or even after, right? They're going to be ready to go. They're going to say, okay, enough's enough. We've seen it go up. We've seen it come down. Now's the time. And I'm going to tell you right now that my phone's ringing a lot more with people with this new year coming than it has in a while about people inquiring about getting ready to purchase a home. So as we kind of prove that demand's going to come to the market, the problem is that 38% of homeowners don't have a mortgage, so they're pretty comfortable, and 65% of the people that do have a mortgage under the interest rate that we're going to see in 2023, according to Nicole Rueth in her DMAR Market Trends report. And so if that's the case, then it's going to have to be the seller needing a reason to move, right? Because maybe they move and they hold on to it because they have such a great rate, they can hold it onto it as a rental. And that's going to be a problem as, okay, do we sell with this fantastic rate? We can cash flow here, we can do that. Or should we hold on to it as a rental, build our wealth further with other people paying down our mortgage? And that's going to be a problem because that's when all this demand comes to the forefront, then the sellers are going to still have the keys, and that's going to stabilize those home prices and stop them from dropping, you know, what little they did, 5% off a 45% gain over the last, 3 years. But that's going to kind of stop that. That's going to hit the rock bottom. And then when that demand comes in, that's going to drive prices up because there's going to be limited inventory. So that's something that I see as quite the phenomenon that people aren't really talking about because we didn't really talk about supply and demand. We didn't really want to talk about it last year when things were going crazy and everyone's like, oh man, this is going to be a bubble. It's going to crash. But we haven't seen a crash. We've seen a slight shift. But now supply and demand is going to come back and rear its ugly head or great head, whatever. It's our economy. And we're going to be off and running. And so here it is. I'm going to offer you a little hope, probably a lot more than a lot of people are talking about. My phone has rang. I have 3, 5, 6 buyers, sellers calling me, getting ready and getting amped up to buy or sell a home here in the new year just over the last couple days. And this is a situation where, yeah, they might be planning ahead and doing it, but we're not having the conversation of, interest rates. What are interest rates going to be here? What are interest rates going to be here? They're just getting prepared. They're taking their gloves off. They're ready to get in the fight. And so I think that we may see a little bit better Q1 than a lot of people are predicting here in the Denver suburbs market. Because absolutely my phone is ringing more. People are talking about it. They're making plans. They're looking at building wealth. They know that real estate is the right answer, especially coming off, whatever the economy is going to do and the boom or bust of the stock market and all of that stuff. So that's my word to you is the time is now to get in, have a conversation with me. If you would like to book a call in the calendar link below, please do so. I'd be happy to have a consultation because the time is really when you are ready, when it works for you, whether it's a lease, whether it's saving money, whether it's credit building, or maybe it's just time to capitalize right now if you're ready on, those deals. It might not be as great of deals as we move through this year with those sellers not willing to give as many concessions and all of that. So if you're ready, let's book a call. I would absolutely love to talk to you. If you are not, check out this video right here. This will talk to you about should you be buying or should you be renting in 2023, and I'd be happy to talk to you further about that. But as always, it's a great day in Denver in the suburbs, and I'm excited to dive into 2023 with you. We'll talk soon. Bye-bye.